this week we'll take a look at the new Ethereum London hard fork, which is an upgrade that was made on the Ethereum network on Thursday, August 5th. We will look at the importance of this new upgrade and also what kind of influence that it may have on the price of Ether or the Ethereum cryptocurrency going into the future. So if you would like to learn more about all this stuff, welcome back to Chibind Brothers. My name is Joel. Please allow me to ask you to hit the like button, subscribe, and turn the notification bell as it helps us with the YouTube algorithm to get our message to a wider audience. So now that I have the article pulled up, this article will help us dissect exactly what is going on with the new upgrade called the London hard fork on the Ethereum network. This article goes on to say a significant upgrade to Ethereum activated today that will impact its supply. Here's what crypto investors should know. And this was published on Thursday, August 5th, which was yesterday. So here it goes on to say, a major upgrade to Ethereum, the blockchain that runs Ether, the second largest cryptocurrency under Bitcoin, activated on Thursday. Here it goes on to say, on the news, the price of Ether jumped. It is trading at around $2,630 as of Thursday morning. Guys, this was on Thursday. As of now, Ethereum is trading at about $2,900. And so here it goes on by saying that the upgrade called London includes Ethereum Improvement Proposal EIP 1559, which aims to change the way transaction fees or gas fees are estimated. Guys, this is really big and we're going to explain exactly why this is very important. And here it goes on to say, currently users must bid for how much they're willing to pay to have their Ether transaction picked by a miner, which can be extremely costly. Under EIP 1559, this process will be handled by an automated bidding system with a set fee amount that fluctuates based on how congested the network is. So guys, exactly what is going on here is that if we look at exactly how Ethereum has been working, is that it's been hard for a lot of users on the platform, especially when they're trying to get their transaction validated. They have to pay the gas fees or the transactional fees, and they basically have to manually put in these transactional fees until one miner somehow accepts whatever fees they're putting in. So it's very hard and can be quite costly. Wow. As this new upgrade is bringing in some differences as to how this is handled, but it's still not bringing the gas fees lower, just to be clear there. But exactly what it's doing here is, as it says, it is creating an automated bidding system. So the network itself would have a set price or a set transactional fees that it will be setting automatically, and then it will just change that based on how much transactions are happening on the blockchain. So if there is a lot more transaction, then this gas fees might automatically be changed to a higher price, but this will be automatically done, and you as the user don't have to go and manually do it in there, which is really big. And there is another component of this that we will explain later on in this video. So let's move on. Here it says, this is great for Ethereum casual users and makes the protocol less intimidating to use. Another major change under EIP 1559 is that part of every transaction fee will be burned or removed from circulation, which will begin to reduce the supply of Ether and potentially boost its price. Guys, this is really big here, and we will explain exactly why this is big, because this right here with, burning the supply of Ethereum could be really good for the price of Ether or Ethereum going into the future, and as I'm going to be explaining this real quick right here. And here it goes on to say, that's why in part EIP 1559 is one of the most significant upgrades to Ethereum since the network launch. And then, so now we're going to read the next paragraph, which will go into explaining exactly why the burning of these Ethereum coins can be bullish for the price. Here he says, while EIP 1559 aims to strengthen the ecosystem of Ethereum, which is known for its smart contract capabilities that power DeFi or decentralized finance, apps, and NFT or non-fungible tokens, among other things, it is likely that there will be much shorter impact on investors. So basically what it's saying is that the price may not be affected right away as of now. Like right now, we're seeing the price going from $24, $2,300 to $2,900. It's not that big of a price hike, but it's still something. But however, long term, this is where it is most important for burning these coins, because Long term, however, the proposal's co-authors hope to make Ether deflationary by reducing the supply. This would work extremely beneficial for investors, Connor says, especially with all the recent talk of inflation in the United States. It will give crypto investors an option to hold this deflationary asset because, as we know, guys, most people, when we look at Bitcoin, Bitcoin is a deflationary asset because it has a set amount of Bitcoin that could ever exist, and that is 21 million. But Ethereum doesn't have that. Ethereum can have an infinite amount of coin because more coins are added to the blockchain, or the circulating supply, as miners are mining and and are solving these complex mathematical problems, because Ethereum is also a proof of work protocol, which we will talk about a little bit just later on in this video. And so, guys, making this coin deflationary, meaning that its amount in the circulating supply or in the system shrinks over time. That's what deflation is. That's what creates the value. That's what in the future it may be bullish for the price to go much higher, but not really now. And that is also one of the big things that people sell out things such as gold or Ethereum. It's the scarcity, being rare, not having a whole lot of it. That part of being deflationary is one of the big value proposition that now Ethereum is basically trying to also provide us with that part. So as we go on to read, though, this is not exactly going to be 100% deflationary, as it's going to explain it down here. But the EIP 1559 proposal alone will now make Ether deflationary alone, right? Many of these expectations are likely too optimistic in the short term and will become more material in the long term, she says. That's because the nominal amount of gas burned won't outpace the network inflation. And what it means here is that the rate of generation of new coins or Ether on the blockchain via mining, or the proof of work, is much higher than the rate of burning of these coins. That means the amount, the circulating supply is still increasing. But the problem here is that the circulating supply is being offsetted by how much coins that are being, burnt out. So that this means that the rate of inflation is basically somewhat being slowed down in this case than what it would be if we didn't have this new upgrade, the EIP 1559. So that is the part that we should be able to basically differentiate between Ethereum still being inflationary, but implementing some more things that could help it be a little bit more scarce, or just a little bit more deflationary, but not completely deflationary like Bitcoin. And then it also goes on to say that, but this EIP 1559 also wouldn't lower the gas fees or prices and the cost of transaction on the Ethereum, which can be pretty high. And guys, this is a problem that a lot of people complain about, that the Ethereum gas fees are pretty high. And the last thing here is that, Ethereum will basically be moving from a proof of work into a proof of stake protocol by the end of this year or early into 2022. And basically what is going on here is Ethereum is just like Bitcoin, a proof of work protocol. You need to have miners who are mining using complex mathematical problems that are being solved on advanced complex computers to be able to validate transactions, and the validation of these transactions helps reward the miner a certain amount of crypto. But going to a proof of stake protocol, what happens in a proof of stake is you don't need any more computing power. All you need is the power of staking. Basically, how much you have stake in a staking pool is based on that, whatever percentage you have staked in a staking pool, or whatever amount of money, value you have staked in Ethereum, is what will be able to validate these transactions on the Ethereum network, and then you will get rewarded a certain amount of the new coins that are being added into the circulating supply. And what is good with proof of stake is it's going to be much more energy efficient. As if we compare it to Bitcoin, Bitcoin is not energy efficient because Bitcoin uses a lot of power. Even Ethereum, as of now, uses a lot of power for mining. But going to a proof of stake, we don't need as much power, and we won't have any issues with the environmental issues that a lot of people have been bringing up, especially with Bitcoin. So then, guys, the EIP 1559 is not the only implementation that has been made on the Ethereum blockchain. There are some other Ethereum improvement protocols, such as DIP 3554, which delays the difficulty bomb that is coded to make mining more difficult, essentially freezing it in preparation of Ethereum transition away from proof of work model. This is basically when the proof of stake will be implemented. What will happen is that the network will incentivize using the proof of stake to be able to validate transaction and to get rewarded the new coins that are unlocked by the system, and not doing as a proof of work, because it will be much more difficult to be able to validate transaction using a proof of work in that regard by the time the Ethereum 2.0 has been implemented, with the new proof of stake protocol being implemented and up and running at that time. And the next one is the EIP 3529, the EIP 3198, and the PIP 3541. These are not really that much important as these first two that we just explained, so I'm just going to skip them. So now, guys, we're just going to go into the chart of Ethereum. As we're going to see, we see that Ethereum has been recovering lately, and as of now, it's trading at about $2,885. And what is really interesting here, guys, is that when you look at this graph, we see my moving averages. My blue line is my 50 simple moving average, and the white one is the 200-day moving average. And what we're seeing here, guys, is that we're seeing this 50 moving average going toward a 200-day moving average as if it was going to make a death cross like we saw with Bitcoin. But what is happening here is we're seeing a reversal in the price, in a reversal in the moving average, where it's basically changing course and basically trying to slope back up, which is really bullish, because it means that the things are changing, the technicals are changing, that the technicals are pointing toward a much anticipated recovery that is coming. But guys, we also have to be careful in what we're saying or what we're anticipating, because when we look down here, MACD is really hoverbot. That means we have to be able to anticipate at least a short-term sell-off before we march higher. So I hope that I provided you with enough value in this video. And if that was the case, please allow me to ask you to hit the like button, subscribe, and turn on the notification bell, as it helps us with the YouTube algorithm to get our message to a wider audience. Now, guys, if you would like to start investing either in the stock market or the cryptocurrency market, you can sign up for new accounts using our Weibo, M1 Finance, Coinbase, and BlockFi links in the description below. And when you sign up using our links, we will both get some monetary value, and you can start using these platforms for investing your money. With that being said, I'd like to say thank you, and I'll see you in my next video on Sunday. Bye.